Welcome back to the Capital Mindset Show, everyone. Hope you guys are having a great day. As always, today we're going to be talking about Amazon stock that you have right before you. So this is actually the community vote. So the ones that I'm supposed to go through are a couple. Amazon actually was the #1 winner, and that's because they had earnings. And if you recall my last video with me, you can grab an egg and throw it on my face, because I said it was kind of like a layup, and the market didn't react too well to it. Okay, but that's good because I wanted to build out a position, and it would have been really sad if Amazon had run away from me and I wasn't able to build out that position. So you guys don't need to wait for the next portfolio update. Just clearly expect that I will be accumulating Amazon here and there across time for the foreseeable future. And I'll kind of be discussing with you guys what are the price points that I'm really looking for Amazon. But really, I just want to talk about just on a high level, why Amazon, right? And I think there's a bit of a nuance here, because I feel like, some people just point to big tech and they just buy big tech. And, keep in mind that there have been instances on this channel where the long forgotten big tech stocks were absolutely hated, and I feel like that they were great buys at those times. And don't worry, I will be making a video, because as of today, Salesforce is up about 14% after hours on the earnings, and I think we're up close to 50% from the purchase price now on that one too. So it's been really good to see some of these perform, but that's not how usually this thing works. I remember that for some of my other positions, it took me a very long time for me to actually see the massive returns. And some of them, I waited even a couple years. AbbVie was one of them that for a while was fairly suppressed, and then kind of eked out some returns, and then clearly had market-beating returns after the fact, if you include dividends especially. But yeah, Amazon's one that used to be a large position within the portfolio. If you've been following the channel for quite some time, you've heard this before, and I really want to build out the position. I really believe strongly in Amazon's mission. I believe strongly in Amazon's future. I actually think they're a safer bet than something like Alphabet, and that's saying something. Alphabet, formerly the largest position in my portfolio from 2022, overtaken, of course, by Meta, Netflix, and Amazon might be one to overtake it as well. And we'll see if Salesforce overtakes it at this point, and Perion's also about to overtake it. So Google is no longer that far off in terms of #1. So we'll see. But anyways, talking a little bit about Amazon, I'm a very strong believer in their advertising business. Now let's go over to their web slides, and I want to talk quickly about this. So this is the first time I'm seeing this in a while, so I'm going to kind of go through with you guys here basically live, or as live as it can be, because it's a recording. So we see that net sales, we have North America breakdown 63%, international 23%, AWS is its own thing, sitting at 14%. Now AWS is where the majority of the profits from Amazon currently reside. And a lot of people criticize this by saying, well, they're not making the retail work. Well, I've stated this in other videos and live streams that that's not necessarily what you're looking for here. So I feel like people really do miss what's really happening at Amazon. They look at some other components and they kind of forget. But that's the whole point of, it's a market. Everyone has different opinions. Everyone's going to do different analysis, and then their models are going to reflect that analysis, etc. So we're all going to have different performance, of course. Now, AWS, yes, it is where they make all the money, and they don't really make money from the retail. But if they ever end up making money from the retail, that's great. I'll kind of get into why I don't really care too much. I just want them maybe to break even. So if we're looking at the sales, we do see up 9%, up 12% after adjusting for foreign currency. So this is kind of, still in line with my expectations. I'm expecting them to even continue to grow retail sales as the world becomes more used to e-commerce, and they're going to take share from regular brick and mortar commerce, which is still a trend that's still happening. Okay, we're not even there yet. Now that doesn't mean that the likes of Walmart, Costco, or all of them are going to die. No, not at all. They're going to adapt. There's going to be a lot of players. It's just that Amazon had a lot of the first mover advantage, and that actually, well, not necessarily first mover, but they were the most successful, let's say, of among the first movers. And that kind of allowed them to establish themselves as the kingpin of online sales, at least within the United States. You see other countries are dominated by maybe another player, and then sometimes Amazon has an investment in that other player, but yeah, I digress. All right, so we do see that the net sales here is broken down. Again, North America, International, and AWS. This is sitting at, I think this one is the net sales on the quarter. And then this is the Q4 trailing 12-month period. Yeah, because the difference in here is 137, 149. Yeah, so this is just a different time period, and that's all it looks like. Okay, so yeah, net sales trailing 12 months. Operating income, let's see here. Okay, so this is where we can see, okay, this is maybe people are pointing to this and saying, oh, that's negative, et cetera, and stuff like that. I feel like more or less this is fine. Remember the tough comps of 2021. People shouldn't really be comparing too much 2021 to going forward, kind of almost compared 2020. And there are some nuances there that you kind of have to add in to kind of, I guess, bring about a bit better or more colorful conversation on Amazon. So while we do see operating income trailing 12 months is down 54% on an FX adjusted basis, again, I'm going to be saying the same things for the above slide. And then net income, very much the same thing, but also the nuances of some non-cash expenses, such as the write-off of Rivian. So yeah, there's that. And we're going to talk about the cash flows at some point soon. So you see they have a negative net income. Now they're a trash company, just garbage company. All right, segment results North America. We do see, okay, net sales. Okay, I don't really care about this. International, I don't care about this. But basically, it's similar to what we were already discussing. Here's where I wanted to get to, free cash flow. So free cash flow is down 28% year over year. Again, trash business because that's negative cash flows, et cetera, yada, yada, yada. Well, that really ignores a lot of the nuance there from capex, right? So we have regular maintenance capex, growth capex, et cetera. You want to consider all of that. And your analysis, it's your analysis. You figure it out. So with Amazon here, I do believe that people are really missing out or not understanding, similar to what happened at Meta, is that the growth capex isn't forever and it does actually generate a return in the future. Now, that return might differ from me and you in terms of what we kind of come to an agreement on, and that's what develops the market. But I believe that, for example, Amazon's not going to build out a FedEx and a UPS every single year. I believe that at some point they will be done. They did overbuild. Do not get me wrong. That was a bit of mismanagement. They got a little bit ahead of their skis. But I feel like they were punished accordingly. And, that was the time where you probably should have been fearful when everyone else was greedy and kind of thinking, well, 2021, is this just how the economy is forever? I don't know. So, yeah, let's kind of continue down here. I think that's going to be it pretty much because here we have, shares. Share-based awards outstanding, shares outstanding. We kind of still see that it is continuing to grow, but not too much. It's not too much there. Okay, so for those of you that don't like, stock-based compensation, Amazon does have a decent amount of stock-based compensation. Okay, now if we're looking at operating cash flows, we see that operating cash flows are basically where we're at in the same category. I'd actually be looking at that, but not as a definitive measure, kind of just like a smell test, seeing what happens there. Because again, your free cash flow can be a little bit misleading and has been misleading in the past. So if you had not made adjustments, you would have missed out on Amazon. You would have not understood the business. And that's fine. You actually don't even need to invest in this to be successful. You could have completely avoided Amazon if it's not your cup of tea. So with all that being said, okay, so Amazon's earnings came out, and what were some of the highlights I want to share with you? Well, I was very excited to see that even in this environment, advertising continued to grow. Now, advertising for Amazon is a smaller business, and so, law of large numbers is working in its favor in that case because it has so much more room to grow than the likes of Alphabet, which is already a well-established ads business. And Alphabet continued to grow even in the last quarter, but Amazon ads is continuing to grow really strongly. And in the face of a tough environment for advertising, where it's not going to be growing as much, and remember, even during a recession, during a decline, on average, it doesn't really fall that much. Okay, there are some drops in advertising, but it's not Armageddon out there. Now, Amazon in this space, remember, you are perhaps the most valuable kind of customer to advertise to when you're an Amazon customer. You're going onto a website and you're looking to spend money. You're literally the perfect candidate for me to advertise to because you're like, how do I spend my money? I want this product. And Amazon knows, oh, this person wants that product. Boom. All the people who sell that product, you want to be in front of that customer? Yes, pay up. Start bidding. So with Amazon, how I've been kind of playing around it is, I've been accumulating. There are some tech stocks that I've been accumulating here and there as well, like the likes of CrowdStrike, but I kind of paused on that. Salesforce, I'm done with that for now. But Amazon's one that I'm continuing to buy. I will be doing let's say a live stream where I'm kind of discussing again, my newish strategy for 2023. So we ended 2022 on a strong foot, and we're entering 2023 on a really strong foot. again. And so I want to see how I can better position myself for an excellent 2023, 2024 as well. And again, for those of you in the community, you guys know more or less what my strategy is, but we're going to be talking about that here on YouTube as well on the live stream, get the opportunity for some feedback from the audience, etc. So what are the price targets, I think, for Amazon? I've discussed this in the past. I have videos on Amazon in the past, and really they haven't changed too much. And I mean, I feel like that's fair to say. My arguments, my analysis hasn't really changed too much for the price targets or the price points, and I'm really excited to accumulate shares where I'm kind of meh on accumulating shares. It's going to be more or less in the mid 80s range and below is where I'm really excited. But even here, I'm starting to accumulate some shares, but it's not going to be a massive or very hyper aggressive accumulation. If it gets down to those levels, my sweet spot, then that's where I'm going to begin. But we'll see if it gets there. It's a company that, definitely this video is not going to have any effect on, so I have no qualms about, obviously sharing that. And yeah, it would be exciting to see if I get that opportunity. I really do think I might, depending, especially if we get some sort of strong recession, because I feel like the consensus in the market right now is that we have some sort of mild recession, soft landing, no landing. But if we get some more severe recession, slightly more severe than what the consensus is, then I think we could see a new low in some of these equities. And something like Amazon that is now pretty much tied to e-commerce as a whole and the market as a whole. When I say the market, I mean just commerce as a whole. Then if you think that's going to suffer a little bit, we might see some panic. But we also might see that the investor base is kind of already aware of this, and we're not special for even thinking that. And it might react in a way that we don't really know, because it might be that they're like, yeah, I don't care. I already know that. So with all that being said, I think that Amazon's trajectory into the future is really exciting. What they have with robotics, AI, I know those are all buzzwords these days, but legitimately, Amazon has one of the best robotics teams in the world. They have among the best AI teams in the world. They have the acquisition of iRobot, which I believe I'm going to make my own video just after this video, kind of talking about a potential opportunity and discussing whether or not I'm going to be involved in that. But other than that, guys, thank you guys so much for watching today. And if you guys enjoyed this video and want to watch more videos like this, feel free to like, share, and subscribe, or share the video to someone who you think might be interested in capital mindset content. Now, I will be making, again, the live stream, planning on the live stream, so portfolio update and all that, and as well as another live stream for strategy shift, etc. So keep an eye out for that content as well, and better to be subscribed to keep out for that content. Other than that, thank you guys so much for watching. I'll see you guys on the next one. Bye.